Hi, folks. Dan Bird here with the daily scan for Friday, the 27th of December. Two more trading days left in the year. This is going to be a quick one tonight. It's the theme is Has the Grinch stolen the Santa rally? And it certainly seems that way after today, doesn't it? There's a couple of things that concern me that I want to show you, but let's go over and take a look at the dashboard first. First, let's look at the homepage, and you can see the market bias rolled over today. It's actually kind of amazing how this thing is working. It's really been pretty accurate, frankly. I'm going to show you these in a second, and there's something especially on the S&P that I want to point out. But if we go to the market bias matrix, and I'll show you Bitcoin first. Bitcoin continue to roll over. So I drew these in, something that I've noticed. It doesn't mean that this will happen, just something to pay attention to. There's potentially a head and shoulders pattern setting up here. And if this were to execute, now you can see the left shoulder took about 3 weeks. So we might be just starting to create that little channel right there. So it might bounce sideways or it could break through. But if it does break through the neckline down here, then the measured move for this is down here to about 77,500. Somewhere down in that range, or 80,000, somewhere in the 80,000 range is where potentially it could go if it breaks below 92.5, or let's call it 92,000. So that's something that I noticed on Bitcoin, something that I noticed on the S&P. If we look at that here, is because today's sell-off created potentially a lower high for the S&P. So if we don't break back above that, then this might be potentially setting up for a longer term downtrend. So we have a lower low right here already. It looked like it was trying to rally, hopefully back up to the highs over here, but then got rejected. And if that continues lower, then we will have a lower high and a lower low. And in order to break that, now you see that happen back here as well, back in August. We had a lower high right here. We had a lower low right there, but then we broke that lower high. And that's what we need to do here. So we need to get back above this trend line to break this lower low. And then we need to get back above the old highs because we still could create another lower low below this point, but that's something we need to watch for. So that concerns me a bit. Overall, the uptrend, I don't think is broken, and it certainly, the end of year rally has only got 2 more days left, frankly. So it's not looking too good for that end of year rally. In fact, if we look at the Santa rally on the charts page, we will see that it is definitely broken. So 3 days now into the Santa rally. Santa rally is the last 5 days of the year plus the first 2 days of the new year. We've only got 2 more days left. And we closed below the open from the 24th. So we look like we're in a really nice uptrend 3 days in a row, and then yesterday kind of stalled out, and then today it gapped down and continued lower. So we'll have to keep an eye on that. Hopefully we can turn that around. But there's the Santa rally. I'll continue to watch that every day and see how things pan out. So one subscriber asked me to look at the sustainability ratio, which there's a couple of ways you can do that. You can do it here, which actually shows you discretionary, the NASDAQ versus the S&P, technology versus the S&P, growth versus value, and the Russell 2000. Now, what I look for is a negative divergence. But you can see the S&P has been trending lower up here, and these are out also trending lower. Well, that's what they're supposed to do. If the price is going lower, these typically will go lower as well. What I look for and what I don't want to see is when price is going higher, but these are going lower. That would be a negative divergence. Right now, we don't have a divergence at all, in fact. So yes, these are starting to roll over, and it's something to keep an eye on, but that's kind of what they're supposed to do when the market goes down. So if this really starts to accelerate to the downside, the market will likely be accelerating at the same time. So we'll keep an eye on that. The other way to look at those is on the left-hand side down near the bottom. You can look at the Where was it? Breath. Under breath, there is an intermarket breath analysis, which is similar, but you can see it a little more clearly. So now you can see the S&P had been going up, and now it's going down. As a matter of fact, I am going to draw a line in and put in this new potential downtrend line that I just talked about. So there's a lower high right there. That's potentially the new downtrend. So this is starting to move lower. The NASDAQ versus the S&P has already started moving slightly lower. That will stay in there until we break it. Growth versus value actually still looking pretty good. You can see all of these have been tracking higher lately. Discretionary versus staples still looking okay. Mid cap and small caps are not keeping up with the rest of the market, not keeping up with the large caps. And it looked like they were starting to rally, but now it looks like they may be rolling over. So let's take a look at TNA, which is like IWM. IWM is the same thing. So there's the Russell. So you can see it's got a short-term downtrend back here, medium-term downtrend right there, trying to make a rally, trying to recover, but failed today and with higher volume. So all of that is not a good look. The other question that was asked was, what about the risk on, risk off chart? So if we look at a daily chart, you can see the S&P, you can clearly see it. Looks like it's making a lower high. However, junk bonds versus 20-year treasuries actually is still moving up. So there's still risk on right now. So that's putting a little bit of hope for that end of year rally or maybe into January. However, the next level down, investment grade corporate bonds versus the midterm treasuries is heading lower just along with the market. The next one, the high yield versus the shorter term treasuries is going sideways. And you can see growth versus value definitely still moving up, and discretionary versus staples just starting to maybe start to move down. But again, nothing really that's too concerning yet. Certainly things that we should keep an eye on and watch out for, but not really something that's concerning me just yet. The other thing that you can do is look at the 20 and 50-day moving average right here, 50 and 200-day moving average. If we look at the NASDAQ 100, which is 100 stocks, and then look here, you can see the number of stocks above their 20-day moving average. For the NASDAQ 100, since there's 100, there's 16%, which means 16 stocks are above their 20-day. All the rest are below their 20-day. Remember, for me, the 20-day or 21-day really, but this indicator uses the 20. That's the reversion to the mean. So if they're below that, then they're beginning a downtrend. And this is the 50-day down here. It's not yet at oversold. 20-day is at oversold. And the 200 is not yet below the 50 point. Bullish percent index is not down here. It's not quite yet at the point where the market reverses. So that implies there's still downside left to go. And one way you can track this is you can set up a scan in stock charts. And I'm going to do this very quickly. So go to new scan. You can see right here, it's looking for volume greater than the average over the last 20 days. We want the NASDAQ 100, which if you go down here to indexes, click this and select NASDAQ 100. So that just added it to my scan. And I want also the simple moving average for the 20-day, which is what that indicator showed. 16 stocks were above it. Now this is showing volume, but what I want instead is the close. And I want 20 days instead of 50. And instead of greater than 1 million, I want the close to be greater than the 20-day. So that's what that indicator said. So there were 16 stocks that were above their 20-day moving average. So that's what this should show us. So this is a way you can use that 20, 50-day moving average, especially when the market really sells off and we get near a bottom, to find the stocks that are strong, that haven't sold off all that much. So if we run the scan, you can see there's the 16 right there. They're names that you should recognize. So if I move this over to my scan dump and massage the data, I can actually look at each of the charts using Chartbook. I know I'm doing this quickly, but this is how to use stop charts. So there's Apple. You can see the blue line here is the 20, for me, the 21-day exponential, which is not quite the same. So the 20-day actually will be a little bit lower than that. But there's Apple. You can see the names, Analog Devices, Amazon above the 21, Broadcom, Cisco, Dexcom. Now, Exelon, it's probably above the simple, but it's below the exponential. Global Foundries is above. Gilead Sciences, Google, Honeywell, Lululemon, interestingly. Really nice chart on Lululemon. It's really had a nice run lately. Marvell Technologies, Palantir, Ross Stores, and Tesla. So those are the strong stocks. So that's a way to find the strong stocks when the market has really been selling off quite a bit. One other thing, I mentioned last week that I was going to be looking for stocks for end of year tax loss harvesting. So these are stocks that have sold off a lot over the year, and people that are still holding them are just probably tired of holding them. And I mentioned two of these before, but I'll show you the charts. So there's TRMD, and I did run the scan, and the scan now is located on the website under portfolios. So if you click on portfolios, you'll find there's 33 in the list, and all of them look very similar to the ones that I'm going to show you that I've already mentioned, actually, these two. But if you want to see the whole 33, they're right there for those that have an annual or monthly subscription. You can go right there and see those. But that's what they look like, just selling off dramatically. It looks like it had a little bit of a bounce. But these are ones that you could potentially buy on Monday or Tuesday because tax loss selling, people will they're tired of holding it. They want to take the loss at the end of the year. They'll sell it and then a lot of times buy it back in the first week or two. Now, this is a short-term signal, so you have to keep in mind with my disclaimer, I am not a financial advisor. I can't give you recommendations on what to buy or sell. You have to do your own due diligence. So this is for educational purposes only. So again, this is my theme. Has the Grinch stolen the Santa rally? But keep in mind that this is not recommending to buy these stocks. This is a short-term trading strategy only, and only for those that are interested in trying it. You are completely responsible for your own trades. The other one that I mentioned last week, that's off this TRMD is number 2 on the list, CELH, which was a darling stock that a lot of people really liked. You can see what it looks like right there. All year, just been selling off. Actually, since May, had a nice double top and then just collapsed. But looks like the selling is still continuing today and maybe will Monday or Tuesday. But this is the kind of thing you could potentially buy, wait for January to see if it gets a bounce. Very low risk because you can put your stop right below the low over here. So right around 25, it's currently at about 26.50. And then if it does bounce, just take a quick profit. Now on that same page, I'm going to put the dividend scan that I will run next week. So that will also be on the portfolios page. I'll run now that will be a long-term strategy, the portfolio, the dividend scan. All right, the last thing I want to show is this right here. This is what John Carter showed. And in fact, John Carter sent me his slide deck that he opened up the money show with. And I'm going to go through that, and maybe on another session, another video, I will highlight some of the things that he mentioned on his presentation. But here again, this is the daily chart on the left. You can see there's the trend right there, the lower high. If we don't break that, then we could be in for, that end of year rally may not materialize. And over here on the right is the monthly. So right now it is still light blue. That means it's still higher than the day before. And if you'll notice back here in 2021, and this is now on the website, I'll show you where to find it. But 2021, this was November, and this was December. See down there at the bottom, there's November and December of 21, and all of 22 was a bear market. So this gave us advance warning, even you can see it up here, even though the market was hitting new highs, the momentum was slowing down for the monthly. We are still above last month's, but if we get any more selling, if it goes below the 50-day moving average over here, then this is likely going to turn dark blue, and it might be the beginning of a warning sign. Now, John Carter mentioned he'd like to see 2 months on a monthly chart. We don't have any yet, but if we do get the first one, then we need to really watch in January if we get a second one. So that's what that looks like. Again, something to keep an eye on, just be aware of. Now, on our daily scan, we did get stopped out of a couple. We got stopped out of Brinker right here, EAT, and we got stopped out of Eris. And I moved the stops up because just what the market was doing today, that's something that you should do if you think the market is rolling over and getting ready to potentially go into an extended downtrend. Then you can move your stops up so you take less of a loss. And if it reverses, then that's great. Then we can move the stops back down or keep them there if these move higher. But I also took half profits, as I mentioned yesterday that I probably would. I took half profits on RDW. So anything that's in bright green now is half a position. And down here, you'll see this is the one right here, 28% profit on half that position. Google was the other one we took half on. We had 10.5% on that one. Both of these, if they stop out, will still be positive up here. So that's good. We'll have very small losses here. Now, if the market does continue to trend lower, then the idea and the way that you should be viewing this, viewing the idea of stops, is that your stops will naturally take you out if the market is going lower, and you'll be back into cash waiting for the next opportunity. So you'll have enough cash to be able to get in when the market bottoms. And I'll show you ways to identify where that bottom is if and when it happens. All right, so that's it for now. Thanks for watching. Have a great weekend. We'll pick this up on Monday, last 2 days of the year, and see if we can't recover from this sell-off today. Although it didn't look too good. Actually, the end of the day looked a little better. Over here on the charts page, on the 10-minute chart, you see right there, we actually came back down to where we opened right there early in the day and then bounced. And right at the end of the day, we bounced again. This is a 10-minute chart. So just in the last 10 minutes, the market rallied a little bit. That doesn't mean much on a Friday. A lot of times that can happen just for rebalancing portfolios. So we'll have to keep track of it next week. But right now, it doesn't look too good. Looks like it's continuing to go lower. So be careful out there. Have a great weekend, and I will talk to you again on Monday. Take care.